Hello traders, the title of the video is how to trade speculative Fibonacci crab pattern like a pro. So you may say, George, I never heard about Fibonacci, I never heard about a speculative crab pattern, all right? Or you may say, George, I never heard about a Fibonacci pattern, all right? To learn more about the crab pattern, go to www.dayprotraders.com and just click on the crab pattern. That's the first page here. And then you can spend time reading about the crab pattern. I'll be posting also a video at the end of this web page. And when you finish to read it, all right, you can check other Fibonacci pattern like the butterfly pattern, bat pattern, okay, a Gartley pattern. And when you finish with all those studying, those are new pages that I have added now. So don't think that this is the old page that I have before. Those are new pages now. And also when you finish, you can take what we call the Fibonacci pattern test. Okay, test yourself at the end of this web page, Fibonacci test. Take a test, okay, to improve your knowledge. Now let's go back to the topic about the speculative Fibonacci crab pattern, how to trade it like a pro. Now, I say to traders that very often traders will call something Fibonacci pattern that is not in fact a Fibonacci pattern. Sometimes traders get away with it. Why? Because what they were doing is a speculative, but sometimes they are not even aware that they are taking a speculative trade. That's why sometimes traders get into trouble just because they do not know that what they are doing is a speculative trade. The most the valid Fibonacci pattern, most Fibonacci pattern that are valid will be formed after a corrective wave when a trending phase is completed. So there should be a trend, either up trend or downtrend, and after that we want to see a correction. Now, the correction normally should not come all the way to the beginning of the trend. Now, before we will see a Fibonacci pattern, either a crab pattern, butterfly pattern, and so on. Or we have a downtrend and a correction is completed, then a Fibonacci pattern may be formed. Normally, we do not want the correction to come all the way to the beginning of the trend. If the correction comes all the way to the beginning of the trend, then we know that we are dealing with a speculative, okay, Fibonacci pattern. Sometimes it will work beautifully, sometimes it may not. But you want to be aware of it so you know exactly what you are doing. All right. So the first two conditions before we may have a Fibonacci pattern is that a trend is completed and a corrective wave also is completed that is not canceling the trend. As I explained to you already, sometimes they do things differently because they adopt what we call speculative mindset. So one can adopt a conservative mindset or a speculative mindset. So when you are adopting a conservative mindset, you are more prudent and you are doing everything by the book, by the rules, isn't it? But sometimes we say, all right, you are like in a play mode. You are playing, all right. So you know that okay, hey, it's not exactly that. But let's see what will happen. And sometimes behold, those tricks can be magnificent. So because of those reasons, traders go around and they play with that. Or they see somebody, or they watch a video on YouTube, or they see on a website, or they see an image or a chart when somebody is pointing to them. This is a crab pattern. But they don't know what the trader is talking about. That image, that picture, is a speculative crab pattern. And I have one example here, and we're going to go through it. So my crab pattern is starting from here. So remember the two conditions that I told you that we must have before we see a crab pattern. There should be a trend, and there should be a correction, and a correction should not cancel the trend. Do you see any trend? Do you see? So all the price was doing before this point, he was just consolidating, you see. He went up, he came down, blah, 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 blah. So some trader may say, George, It's just an inverted, it's just a head and shoulder chart pattern that I see here. Good. So there was no proper trend unless I do not have all the data that I need to have here. So with what I can see here, it doesn't look to me that we have a trend before. Okay. So now you see the price start going up. So this is the point A. So price start going up. Go to point B, come down to point C, and now we are now at point D. Now you can see that, so if you don't know what is, I don't want to talk about a crab pattern. What is a crab pattern now? That's why I will show you that web page before we start so you can learn it from there. I don't want to waste traders' time, okay? So what I'm doing here is speculative. So all I'm calling here as a trend, you may say it's just this price move going up to there. And this is the correction that has completely canceled it. Doesn't look like a trend. And this pullback cancel it completely. So that's why I'm using the word speculative. Now the price start going up. So we know the structure of the crab pattern. You must know the structure of the crab pattern. It's a Fibonacci pattern. Have a definitive structure. So the correction, the top of the trend, that's what we call X. The end of the correction, that's what we call A. So X, A. So the structure of the crab pattern is that the A to B is point A to point B. When the price starts pulling back, must retrace the SA between 38.2% up to 61.8% Fibonacci retracement of SA. I don't want to repeat myself today because usually I repeat myself when I'm talking about Fibonacci pattern, but I'm not going to do that because of what? Here. Okay. So you can see that this condition is fulfilled because it's between 38.2%. Can you see the 38.2% and 61.8%? So that move can stop either at 38.2, can stop at 50%, and can stop at 61.8%. But we do not want it to go beyond that. But that's another topic again. Sometimes you go above it, and with a long shadow, we will talk about that. That's another speculative crab pattern. So the first condition is fulfilled. The second condition is that the retracement, the price action from B to C for all Fibonacci pattern, repeat, all Fibonacci pattern, the B to C condition is the same. Retracement, the B to C must retrace the AB between 38.2% up to 88.6% Fibonacci retracement of AB. So the BC is retracing the AB price action. That retracement can be 38.2%, can be 50%, can be 61.8%, can be 88.6%. So there is a limit between 38.2% at least, a maximum 88.6% Fibonacci retracement level. This condition is also fulfilled. So as this pattern, the crab pattern, speculative crab pattern, because I know it's a speculative crab pattern, is being developed, all right, we can enter the trade here if the common center is broken. The first target is the point B. If you enter after the common center is broken, you implement a top-down trading method here. The first target is here. If he breaks above the point B, your next target, there are other Fibonacci key levels that you must watch because of other Fibonacci patterns. Because of other Fibonacci pattern, if you're expecting a crab pattern, okay, after the point B, you'll be watching also the 78.6% Fibonacci retracement level and also the 88.6% Fibonacci retracement of XA, and also you'll be watching this resistance at the S. So there, if you buy here at the point C, target, first target B, next target, remember 78.6%, 88.6%, and the point X. And if it's going to be a crab pattern, because the pattern is developing, no one knows that the pattern will be completed until it's completed. Sometimes, that's what I'm saying to you, the pattern will be completed by the book. What do I mean by that? So they teach you, or you have been taught that in theory, this is what we are saying. The same thing I say to earlier wave pattern traders, that the theory is different from the reality of the market. So if you are learning about the crab pattern, you will know that the point D is so the price can stop at 161.8%. Fibonacci extension of SA. So it's fact is the reverse. It's in fact AS, but I usually say to traders SA, this one. So, but normally when you apply Fibonacci extension, it should be down here. But bear with me, that's what we say to trader SA, but the extension is up there. So you apply Fibonacci retracement, Fibonacci extension. In fact, it's Fibonacci extension reverse. So normally we should say AS. So you apply the Fibonacci extension this way, going up. So the first target for the crab pattern is at 161.8% Fibonacci extension of SA. There. All right. But it can break above it. So people will tell you it can go to 314%, 261.8%, all right, 327%. Other Fibonacci key level, price can extend beyond the first possible reversal point, which is D at 161.8% Fibonacci extension of SA. If you look carefully here, if you do everything by the book here, this is a speculative crab pattern. In this case, it stopped exactly by the book at 161.8% level. It pulled back, people try to push it above, it stopped exactly there. All right, forming a double top. This is a very, very beautiful bearish, all right, crab pattern here, forming a bearish pattern at the possible reversal point of the crab pattern, and the rest is history because it came down and traders set target by using the depth of the double top, the greediest target, like this, and then to see price does not go down for no reason. There is always a target level, and the ultimate target was right there, and the midpoint target somewhere in this zone. And after it did below the ultimate target, came down a bit, that's it. So this is a speculative, a crab pattern. So the purpose of this video is to tell traders that when you are trading the crab pattern or any other Fibonacci pattern, you need to understand whether you are dealing with a speculative pattern or not. And when you are dealing with the speculative pattern, you want to trade carefully and take the necessary precaution so you do not end up losing. That's the whole point of this tutorial. Again, the pattern, sometimes trader wait. So this is why sometimes you may see that I talk about traders will say sometimes this is a bearish, a crab pattern. Again, to conflict with trader when they are saying that. Why? Because it depends where you are trading the crab pattern. So if I'm buying here, for me, that's a bullish crab pattern. It's being developed, so it's blah, blah, blah. Here, this is a good place. This is the best place. In fact, point C or above point B. If you are trading a crab pattern, those are the best place to trade them. If you are trading a butterfly pattern or a crab pattern, you can buy at a point B and also above point B and also above point X. You see? But then in some Fibonacci pattern, only trade the pattern when it's completed. But my recommendation to trade is that don't be afraid. You can trade it as it's developing. So you should take the lion's share. That's it. That's what I'm saying to you. Take the lion's share. Be able to trade it gently all the way. If you manage to hit the target or not, sometimes you may not hit the target all the way there. You may continue more and so on and so on. But you should be able to trade it from those points, even when it becomes bearish here, and sell it again down if there is a need to sell. You have to understand that this was a beautiful trade. Sometimes it doesn't go down very much as it did here. As you can see here, sometimes it may go down a little bit at the point D. All we know is that at the point D, there will be a little bit of pullback. Whether it will continue more, we do not know. That's why it pulled back a bit, retesting this high here. This is why you probably do very often. You acknowledge this X, and then sometimes you continue to go up more without coming down as it did here. That's why this is exceptional. The next thing that I want you to understand is that sometimes, though it's not what we like to call in theory a valid, proper valid crab pattern, We prefer to call it a speculative crab pattern or speculative Fibonacci pattern. But look, it worked beautifully and the reward was nice, isn't it? So this is it. So if you learn about a Fibonacci pattern, at one point you come across patterns that are speculative. All you need to do, understand that it's speculative and handle it carefully. Don't play it with it like an ordinary trader that do not know whether it's speculative or not, doing all sort of crazy things and they end up getting cooked. You will see it very often, or you may watch videos. Today we show you Fibonacci pattern on a daily chart, all right? You say, oh, blah, 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 this is a crap pattern, all right? Or they may say this is a bad pattern, or even on the hourly time frame. And those are speculative Fibonacci pattern that they are playing with. Professional Fibonacci traders know exactly what they are playing with and they know how to handle it. All right. But sometimes a lot of traders go on the lower time frame, they do the same thing and they get cooked and they dump it and they say, oh, it's not working. The best time frame is to find the best Fibonacci pattern. Now, what I'm saying is that where you are more likely to see decent, can we use that word for a chart? A more reliable Fibonacci pattern, you can see them on a 4-hour time frame, weekly chart, okay. Also quarterly chart, because why quarterly chart? Because hedge funds are looking for Fibonacci pattern on a quarterly chart, and when they see one forming, they will push it. In fact, traders are creating the pattern themselves. You have to understand that as the pattern. So suppose the price goes up from here to here, and then pull back. Now you go like here. You see here. So talking about speculative. So people say, oh, it goes up from here to here. That's a price move. And they will say, George, I don't care about your valid Fibonacci pattern. Here it is, George. Here we have that's X there. That's the A there. So they say that's A, B. Okay. Right now, people will be playing that, or they will say, okay, so on. So this is not a good one, by the way, because it pulled back all the way here. So it formed a double bottom. So what did I say to traders? The same thing for either way pattern. You can do the same thing like this. Huh? Am I talking too much today? I just want you to understand it. So what's going on? So you see that went up and cancel, isn't it? So you say, all right, it went up and then pull back, isn't it? So you are expecting A, B, C, D, yes or no? Because you are doing speculative pattern. But the reason why I'm covering this is even for A, B, C, D. Some traders may say, yes. Okay. Say, oh, butterfly pattern or bad pattern. They will say bad pattern here at 88.6% level. Probably they have trend up 1, 2, 3, going to the 88.6% level, or they may say it's a Gatley pattern, and then you form a double bottom. Now cover that double bottom. Okay, and then they start again. They say he went up, he pulled back. Now A, B, C, D, and they set again a target 88.6%. Okay, 78.6%, and the X, right? And then they set all these target up, and they are doing it all the time. That's all I want you to understand. Okay, so if you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. All right. If this video has been useful to you, please let us know by giving us the thumbs up. If you dislike it, be sure to mark it down, please. All right. However, if you think it's an essential tutorial, feel free to share with your friend on the social media. I will be recording more tutorials about Fibonacci pattern. As I told you already, you can come to Day Pro Traders in your own time. Be sure to read everything so you may understand everything. If you're doing something, do it properly. If you're going to read it all and understand it. Don't. There's a French word called bachoter. Huh? You're just going through things like this, and you're not going anywhere. That's not the best way to progress, isn't it? All right, enough for my blah blah blah. So learn about the crab pattern, butterfly pattern, bat pattern, Gatley pattern, and take the Fibonacci pattern test. All right, in your own time. And then now use a demo account, practice everything that you have learned, and then master it. Because day traders, swing traders, position traders are trading the Fibonacci pattern. Ilya wave traders are combining the Fibonacci trading with the Ilya wave trading. And this is a topic that you cannot discount, whether you are a technical trader or an investor, that will help you to improve, okay, your investing or trading decision. All right. Subscribe to our YouTube channel, Day Pro Traders. And be sure to click on the notification bell so anytime I record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to trade speculative Fibonacci crop pattern like a pro. Happy trading to you all, and I will speak to you soon. Thank you for watching.